Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Citigroup's Q2 2025 earnings are just out, and this is what you need to know.
Today, we're diving deep into Citigroup's second quarter earnings, dissecting the numbers to understand what it means for investors.
Citigroup reported revenue of $21.7 billion, an 8% increase year over year. EPS, that's earnings per share, which tells us how much profit the company made for each share outstanding, hit $1.96, a significant jump of 28.9% compared to the same quarter last year.
Wow, almost a 29% jump in EPS is impressive. So, Cleo, overall, would you say this was a strong quarter for Citigroup?
It's a mixed bag, Anthony. While revenue growth is decent and that EPS jump is eye-catching, the absence of operating income and gross margin figures makes it difficult to get a complete picture of profitability at first glance. However, their net margin came in at 18.4%. Meaning they kept 18.4 cents of profit from every dollar of sales. This suggests reasonable efficiency, but we need more data for a full assessment. The CEO, Jane Fraser, emphasized in her commentary that Citigroup is focused on long-term success and driving returns for shareholders, setting their sights on a 10-11% return on tangible common equity next year. For listeners unfamiliar with ROTCE, it's a key metric in financial services measuring profitability against the tangible equity invested by shareholders.
Interesting. It sounds like they are prioritizing long-term value creation. Let's unpack these results further. Chapter 2, Revenue Performance Deep Dive. Cleo, can you break down where this revenue growth is coming from?
Absolutely. Citigroup breaks down its operations into several key segments. Their market segment saw the strongest growth, with revenue up 15.6% year over year to $5.879 billion. This likely reflects favorable market conditions and increased trading activity. Wealth management also performed exceptionally well, posting a 19.9% increase in revenue to $2.166 billion. This signifies growing demand for wealth advisory services. Banking revenue also saw a solid increase of 18.1%, reaching $1.921 billion. Services revenue grew a more modest 8.3% to $5.062 billion, while U.S. personal banking, USPB, grew 5.9% to $5.119 billion. Interestingly, the all other managed basis segment saw a decline in revenue, down 13.9% to $1.698 billion. It's important to note, however, that this segment is relatively small compared to the others.
So, a strong performance across most segments, with markets and wealth leading the charge. It will be interesting to see if these growth trends continue. Chapter 3, Profitability and Cash Flow. Now, let's talk about profitability. How efficiently is Citigroup converting sales into actual profit?
As mentioned earlier, the net margin of 18.4% gives us a partial picture. Unfortunately, key metrics like gross margin and operating margin weren't provided in this release. These figures would give us a deeper understanding of the company's cost structure and operational efficiency. Similarly, operating cash flow and free cash flow, crucial indicators of a company's ability to generate cash, weren't disclosed in this report. We'll be looking for those details in the full financial statements to assess how much cash Citigroup is generating from its operations. The same goes for cash and equivalents and shareholder equity. These balance sheet metrics are essential for understanding a company's financial health and stability.
So we're missing some key profitability and cash flow data in this initial release. Hopefully we'll get a clearer picture when the full financials are available. Chapter 4, Outlook and Investment Thesis. Cleo, what's the outlook for Citigroup going forward?
Management provided some key commentary, emphasizing their long-term focus. Jane Fraser's statement about the 10 to 11% ROTCE target for next year being a waypoint, not a destination, suggests they are aiming for even higher returns in the future. This implies confidence in their strategic direction and ability to execute. The commentary also highlights several macroeconomic and geopolitical challenges that could impact future performance, including potential recessionary pressures, changes in interest rates, and regulatory changes. Citigroup also acknowledges the inherent risks in forward-looking statements and emphasizes that actual results may differ.
So, a cautiously optimistic outlook with a focus on long-term growth and profitability, but also an acknowledgement of potential headwinds. Cleo, given everything we've discussed, what's your final takeaway for investors on Citigroup?
Citigroup's Q2 results present a mixed picture. The strong EPS growth and positive performance in key segments like markets and wealth are encouraging. However, the lack of key profitability and cash flow metrics makes it difficult to form a complete investment thesis at this stage. Investors should look for the full financial statements to get a more granular view of the company's financial health and cash generation capabilities. The CEO's emphasis on long-term value creation is positive, but investors should also be mindful of the potential challenges highlighted in the commentary, particularly the uncertain macroeconomic environment and evolving regulatory landscape. Considering the industry context, keeping an eye on metrics like net interest margin, loan growth and loss provisions, and return on equity, or ROE, will be crucial for assessing Citigroup's performance going forward.
That's all the time we have for today's earnings analysis. Thanks for joining us on stockanalytics.ai.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis.